Hi, and you're watching the week ahead of LCG. Now, joining me this week is LCG analyst Ipek Ipek, thank you for joining me. Now, we've had some interesting central bank rate decisions this week, ECB. We've also got some important ones next week as well. So I want to talk about the BOJ and also recap about the ECB. What's expected from the Bank of Japan next week?
Well, let's start with the ECB. So the ECB maintained the status quo as expected. However, Mr. Draghi gave a more dovish than expected speech. So he basically hinted at more monetary stimulus starting from March. So we don't know if it's going to be more negative rates or more quantitative easing in time or in size. However, something seems to be preparing in Frankfurt, and the market has been quite happy about it. The equity markets were all painted in green after Draghi's speech. However, we saw just a little sell-off in euro because it seems like the euro bears are much more demanding than simple verbal intervention, and we also have to see the size of the intervention in order to be convinced that the euro dollar may slide lower than 108, 107 levels that we have seen as base in 2016. So after saying that, now we would expect the BOJ not to do anything, and that's probably what's going to happen. However, the speculation of some more or additional BOJ stimulus is now increasing because BOJ cannot stay on the sidelines if the ECB is easing and the Fed expectations, we're going to talk about them later, are softening also. So BOJ has been fighting this inflation since deflation since decades, and we are just like still at very critical levels right now. We have heard BOJ's Kuroda just before I came here speaking in Davos and saying that they're ready to do anything to reach their 2% inflation target. So in this respect, we may hear some dovish comments from the BOJ or even an action. So we have seen yen strengthening over the past couple of months and weeks. We hit like 115.98 this week from these levels, and with the speculations of dovish BOJ increasing right now, it seems like we're back. It seems like now that we are back at 118.12 levels, there might be some more momentum toward the 120 levels again with all these expectations and dovish expectations put together.
From the Bank of Japan, indeed. So we've got the Bank of Japan, we've also got the Federal Reserve, the FOMC rate decision as well. That's the press conference as well Wednesday evening. What is current market sentiment from the Fed next week, and what is currently being priced in?
So let's talk about what is priced in. I like that question. So I was looking, the probability of a March rate hike from the Fed was 50% beginning of January, and it's only 25% right now. And the US sovereign markets price in only more than 50% probability for a September rate hike. So while we were talking about the 3 to 4 possible rate hikes through 2016, the Fed may not be able to proceed with this plan just because the global economic conditions don't seem to be appropriate for the Fed to run at this speed into their normalization program. So we are very much interested to see what Yellen is going to say about the fresh Chinese sell-off in the market. The commodity prices have gone even lower than what we have seen in last August. So all these factors is going to be important, and this is the economic data that Yellen would be watching actually in order to decide whether it's good or bad to go with 3 to 4 high. So we may see these expectations soften even lower, and we have seen the dollar index now topped at 100, and following next week's speech, whatever we hear from there, it is possible that there might be a softening in the US dollar across the board also, so that the EM currencies will be taking a breather as well as antipodeans or high beta currencies.
Okay, so in terms of the Fed and the euro dollar and things like that, obviously we've also got US Q4 GDP coming out next week as well. We've also got UK Q4 GDP coming out on the data kind of front. Are they both going to be ones to watch or not? What are the market expecting in terms of data-wise for those fourth quarter GDPs?
Well, the fourth quarter GDP is expected to be a little bit revised on the downside.
For the UK?
For the UK and for the US also, because we have been through a very hard quarter. So the US may diverge positively. However, the UK is expected to have grown by 0.5% in the fourth quarter. This is versus 0.6%. And on yearly basis, this may go to 1.9% from 2.1% previously. This is all due to the fact that we have seen weakness in the UK and the US in global economy. The Chinese slowdown was by then the developing story. So manufacturing and industrial productions have not been brilliant for the UK. And all these factors all put together with the commodity and oil prices sliding lower, we might not expect a surprise on the upside. So the market is standing ready to welcome some weaker growth numbers, but we are already pricing in the weakness in the global economy as we see the ECB going in toward more easing. The BOJ will be doing the same. Bank of England's Carney this week said that it's not time to hike rates yet, and the expectations for the first BOE rate hike is now pushed to 2017. So the market and the central banks and the monetary policies are preparing the base to receive these weaker numbers. So it's not going to be a huge surprise, not going to be a shocker.
Okay. What about any interesting trades you'll be keeping an eye on next week?
So we're talking about BOE and Carney. The markets seem to have got well beyond itself with the pound. Actually, we have seen pound racing to the bottom. 140.80 was seen this week. Now we have rebounds. We're back about 143 levels, and if the Fed expectations soften at the current pace, we may even see above 143.80 resistance, a setback or a recovery to 145 level. So this might be possible, and we expect to see some base forming at 140.50 levels, simply because we believe that the BOE, the soft BOE expectations might have gotten into prices before the Fed, but the Fed is to follow.
Okay, brilliant. Ipek, thank you ever so much there. That's Ipek Ozkardeshkia on the week ahead. For more, join us next week. Goodbye for now.